What's going on, everyone? Jeff back with another video. And so let's talk about 3 stocks I plan to buy or add to my position in September 2020. And so last night I published a video about 5 stocks that I've taken a loss on this year in 2020. I'll have a card come up right now if you would like to go back and watch that video. And one of the things I talk about in that video, guys, sometimes you will have stagnant positions in your portfolio, or you'll have stocks, for example, that you've owned for long periods of time that just aren't really making any moves. When I find myself in some of those situations, I like to go ahead and take that small loss, devote that money to companies or ETFs I feel have a lot more growth potential. And simply put, there's some stocks you will want to sell, and even right now while the market is up into all-time highs, really you should be thinking more about some positions you can let go and ring the register on it. Not all stocks are going to continue running into all-time high after all-time high. Some will, and some investments you want to continue to build and grow on. I know there is a couple though I've been looking at recently. I have been thinking about moving out of just to loosen up funds to get into more exciting investments. We're going to talk about 3 stocks today, and especially this first stock I'm going to talk about. It's not exactly what you're going to be buying for in the short term. It's really more what you're going to be anticipating in the long run. All 3 of these positions I talk about today, I feel not only have great strength up to now, but could really make big moves over the next 6 to 12 months, assuming that the stock market holds up, the economy stays strong, we see recovery from COVID-19, and things get back to normal or as close to normal as we once knew them. So let's jump right into it, guys. Before we get started, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. First stock to buy for the month of September is DraftKings, ticker symbol DKNG. All right, so a lot of speculation about this SBAC, and that's a special purpose acquisition company. They did a reverse merger to get listed onto the exchange as opposed to a typical IPO. Another thing about DraftKings, COVID-19 was a direct enemy for this kind of company. Why? Because basically all sports had to stop, and now they are getting added back into our dailies. We all know the NBA playoffs are taking place right now. And Major League Baseball, mixed martial arts, the UFC's been having fights. And just to come in a couple of weeks will be the NFL and college football season. So obviously, as sports start to come back, sports gambling is going to go up dramatically. This platform is going to be used much, much more. And even to further that point, just a couple things I want you all to keep in mind. Sports as a whole is still not entirely back. There's still a lot of issues going on. One of the most obvious things, fans not being able to come to games. And we are just honestly in a different world than we were 6 months or a year ago. As sports continue to come back though, I just think this platform is perfectly set up for a lot of growth over the next 6 to 12 months. So I can't really look at this 1-year chart and say, hey, DraftKings is going to be a spectacular buy under $30 a share, but that's a really, really good place, I think, to start an investment, or even here at the $35 to $36 range. Now let's play some hypotheticals here. Let's say that perhaps another big COVID spike happened, and for some reason or another, sports were to get canceled. Let's say the NFL season was to get canceled, or perhaps the rest of the NBA playoffs. That will probably have a direct impact on DraftKings stock price. And so you will probably see a big dip on any negative sporting news that's gonna disallow people to gamble on sports. What do they always say? The cliched thing, don't try to time the market. However, I think this is a particular stock or equity that you should try to time a little bit. Morgan Stanley is saying to ring the register on DraftKings and Penn National. Obviously, DraftKings is up about 400% this year, and Penn National up about 300%, saying that investors' expectations are too high. Then Morgan Stanley downgraded both to equal weight from overweight. I almost see this exactly opposite. I think that expectations are not high enough, and this stock has really been being kept in check because of all the uncertainty with COVID-19 and just the basic bare bones structure of the app and the internet service. You can't gamble when there's no sports being played. So this one is actually, in my opinion, probably beat down where it would be if the sporting landscape was more normal, more like it was 6 months or a year ago. The new price targets for the two right now: $37 on DraftKings and $55 on Penn National, which is almost exactly where they're both trading at right now. So this would be my advice. I'm going to watch for any significant dips. I'm also going to watch basically for any kind of sporting news, anything that might come as a threat to sports gambling. Watch DraftKings drop down a little bit, and those are going to be the situations where I'm going to add to my position and start trying to build it into the end of the year. MLB playoffs and World Series will be in October. Then, of course, NFL playoffs start in January. We'll have a Super Bowl in February. Honestly, what this is it's a coronavirus recovery play, very similar to last month's pick with Planet Fitness. But I think go ahead and take this risk and just watch the stock price. If it starts inching back towards $30 a share, probably a really good place to add. And even here in July, we had a couple opportunities where it was at $28 and $29 a share. I think that's a very good place to start picking up stock in DraftKings. I think this company is really going to be huge in the next 6 to 12 months. All right, so the second stock I'll be looking to build my position more in the month of September is Walmart, ticker symbol WMT. And Walmart was widely considered just a very, very boring stock for a long time. Not super amounts of growth. Not only is it a retail giant, but now I feel Walmart is a true tech company, okay? Very, very exciting, and a lot of very exciting things on the horizon for Walmart. And it's making all the proper adjustments to go toe-to-toe with Amazon. Now, a lot of people think you can only have one winner in this space. Again, as of right now, Amazon is still probably a better overall company, but Walmart really seen a lot of strength during COVID-19. This was a great stock to own during the pandemic. As we pull it up right here, it barely dipped, and only for very, very short periods of time. Held its value very, very well, now trading over $140 a share. And it was announced back in July, I'm sure some of you have probably already heard about this, that it was actually taking on Amazon with their $98 per year delivery service, and they dubbed it an Amazon Prime Killer. I hate those kinds of terms and expression like Tesla Killer, Amazon Prime Killer. I do not think Amazon's business is going to suffer at all from this. I think Amazon and Walmart is number one, and number two, you got to own in the retail space. Perhaps I would actually say Walmart, Amazon, Alibaba. That's probably your three best plays in that space. One little advantage though, Walmart has its priced at $98 per year, and of course Amazon Prime is $120, and the service will soon add video entertainment similar to Prime, other perks like discounts on gas, product deals, reserve delivery, and 2-hour delivery offers. Back on the 18th of August, they knocked it out of the park on earnings, beating EPS by 31 cents. And of course, GAAP EPS of $2.27 beat by 99 cents. And their revenue of $137 billion beat by almost $4 billion. So this company really, really boomed during COVID-19. And of course, as we've all heard lately, Walmart is one of the front runners trying to acquire TikTok. Just because this is swirling around does not mean that they've landed the TikTok acquisition, but they have talked about teaming up with a presumed front runner, Microsoft, on a bid that could range to $30 billion or even more. So what this would do if Walmart and Microsoft was to team up and buy TikTok is that they could really, really plant even more advertising into that platform. And as we all know, advertising is the key to higher revenue. I just think Walmart is a really, really strong, not just retail, but definitely a tech play now. And I believe right now is a great time to be building on this position. All right, now lastly, this is actually an ETF. I will be building on this position as I get opportunities to. It's ticker symbol GDX, the VanEck Vectors Gold Miners ETF. So the first time I actually mentioned this ETF on my channel was back in September 2018. So nearly 2 years ago when it was trading at $18 per share. And now it's trading well over 41 and has had a 52-week high of $45. So the importance of always hedging gold into your portfolio is very important for long-term growth. This one from back during that time, well over 100% return, and gold's performance over the past 2 years has been phenomenal. And really, if you want to look at performance of cryptocurrency, gold, tech, those type of things, fantastic. Oil has probably been the worst place you could possibly invest. I've cut nearly all of my oil positions out of my portfolio except one that I've held very, very long, but gold continues to show signs of growth. The reason I like this ETF so much, guys, is all the specific holdings you get when you buy. Now, keep in mind, it only has about a 0.52% yield. Actually, you're getting none at all because it has a 0.53% expense ratio. That is not at all why I'm invested into this, though. Not really looking for dividends here. I'm looking for growth. My lifetime position is up very, very nicely. This is the reason why I continue investing in this ETF. You're getting exposure to the best gold companies out there. Newmont Corp, Barrick Gold Corp, Newcrest Mining. That's another one I've taken a lot of interest in. Kirkland Lake Gold, and then Kinross Gold Corporation down here at the bottom. I actually hold a small position, and that is too. This ETF gives you a lot of variety and has just performed well over the next 2 years. And I think gold is going higher from here. So I wouldn't necessarily say run out and buy GDX at $42 a share. Definitely a good one to keep on your watch list, and then wait for a good opportunity to open a position. I know some people too that watch the channel very heavily invested in gold. I don't think it's performed as well as tech has, but it's a very, very nice way to leverage and balance out your portfolio. Always try to take positions in gold. So that's all I got for the video, guys. Go down to the comment section, share your thoughts and opinions with me. Always enjoy hearing that. Thank you so much for watching the video, and have a great day.